Welcome to Total Money Management, going over the week that was August 11 to 15.
How are you, Thomas?
Very good. Almost started covering August 4 to 8.
Well, you can do that if you want.
No, I won't.
You talked about last week,
It's
mate.
been a week.
Living in the past.
I was thinking, didn't we just go over this?
This week is proudly sponsored by Yalumba,
Yalumba Wines.
makers of the wonderful cigar Coonawarra Cab Sav 2022, and the lads have agreed it's a good drop.
It's a very good drop.
I think you're just trying to get them to send
Cheers,
you a
gents.
free case.
Cheers.
Another green candle for the week. One and a half.
Mischievous.
It's been a very good week, and we're probably going to get some letter in the post about not allowing. We can't mention Yalumba Wines.
Oh, really?
Probably.
So we make it like a Wayne's World thing where we have to open the pizza box but not mention the label. Right?
Let's have a drink and go.
Well, Buffett said when the market's up, when he goes to Big Mac, when he goes to McDonald's in breakfast, he might have a little bit more than an egg McMuffin on a good week,
Or a red wine.
This week's been a good week, so the wine's good.
Well,
if next week we go down, we're back to Aldi $3.50 turpentine.
It's the cheap Doritos. I think you put a message in our chat before saying that Buffett had just bought
United Health.
Health. That's
No,
it.
well, it's only a rumor, I think, isn't it?
Are you spreading rumors?
Well, look, I don't know. CNBC might be sharing rumors.
Right.
Very possible.
It's very likely.
Yeah, Buffett apparently went pretty big. Michael Berry.
I think it was
Followed.
$5 billion or something. There was like he'd opened with $5 billion or something. But Michael Burry took it, and also Bill Ackerman,
Just a sliver.
another well-known. There's quite a few well-known hedge fund managers that have bought into it.
And they'll be looking at there's been blood in the streets for
In healthcare.
Yeah.
It's funny because I've sort of looked at it but gone, nah. And I think mainly because I've been focused on energy because energy's so cheap. And healthcare's okay, but I just think it's a little bit up in the air with Trump and tariffs and, trying to make drugs cheaper and all that kind of stuff. So I'm just a bit...
Well, the dividend didn't seem amazing.
And
the PE was like 12 or something.
So
it's obviously relative to what a lot of other stocks are doing, probably makes sense.
Yes. But if all the other stocks are expensive, it can still be expensive but looks cheap. Like you say, you look at it and it's like when, they look at some stuff and go, oh, it's relatively cheap compared to the US. And it's like, yeah, but the US is on a caper 40. So you look at a caper 30 and go, man, that's cheap. And it's like, well, not really. It's not absolutely cheap, but it's cheap relative.
Well, I mean, even if he has invested, it's still a measly $5 billion out of his
$350 billion in cash he's got.
His pocket change.
He's raised 1.5%.
It's an amazing. Just imagine waking up and going, I've got $350 billion, and I don't know.
I don't think I should imagine. It's just probably not going to happen.
Oh, not with that attitude.
I'm going to get $350 billion. Yeah, I can do it. Awesome. All right, so what we're covering off this week, US-China tariffs delayed another 90 days.
No, that's last week.
Don't do that to me, please. It's been a week. All right, if you want this bottle of wine to last.
Well done, bro.
Podcast,
Well done.
Well done.
Good hit.
Righto.
Talking about AI,
Yes.
RBA rate cuts, and Boss Trump.
Boss Trump, yes. The tariffs have gone back another 90 days between US and China. Generally, I think I said on the week that was video this morning, that one, Tom, August 15.
Yeah.
This week's.
I'll look forward to watching it.
That's the last one, Tom, promise.
Yeah. No more jokes about that. The idea being that really what I'm looking for is just to convince people that US and China are not really that interested in making a deal. What they're interested in doing is extracting themselves out of their current entanglement with minimum impact on their local economies. Right? That's really what's going on.
How do you think this was Trump's meeting with Putin today or next week or something?
Well, tomorrow our time.
Yeah.
Well, I think from what the headlines have been this week, Putin has been sort of doing that usual sucky shit that he does with Trump, Donald's great and, Americans are really nice, i.e. Donald Trump. Trump has basically said he thinks the meeting will be a success. But the key, as far as I understand it, is Zelensky publicly has said we're not going to concede any land, right? There's 4, they call them oblasts, but they're like states, right, regions. There's 4 of those that the Russians have got. Zelensky is sort of saying, no, we're not going to give them those. We'll keep going. But apparently, and again, you got to take this, with a grain of salt. The rumor was privately Zelensky was sort of like, yeah, okay, we'll probably have to concede some land. Trump has said today he thinks we can reach an agreement, Ukraine will have to probably give up some land, right? Trump is, the guy's such a suckhole, right? He wants the Nobel Peace Prize. That's what he wants.
That's the rumor. Do you think it's true?
Well, yeah, because he rang the Norwegian minister and basically was like, I should get the...
How do I get this?
I should get the Peace Prize, right? I mean, he's 78. You think he'd be going, well, who cares?
Weren't we talking like 2 weeks ago about him and Putin not being friends anymore?
Yeah, well, this is the problem. The issue...
It's just children.
Yeah.
Trump is somewhat misread, but again, you've got to take the in a sense the man out of the game, because what Trump is trying to do, the Americans have looked at the Russians and gone, you know what, they're nowhere near as strong as we thought they were. They can't even knock over Ukraine in 3 years, let alone 3 days, right? So the Americans went, hey, they're not that much of a threat to us. Right, so therefore the Americans said, the issue we got is China, right? We've got to get over there to the Asia Pacific and handle China. We can't fight 2 foes at the one time. And so they essentially what America is trying to do to Russia is say to them, listen, you guys, you got a shitload of resources, you got heaps of agriculture, you got heaps of energy. If you weren't such a mob of assholes, you could join the world economy and make lots of money and do really well. But Putin is not like that, right? Putin has this idea in his head that he wants to go to, I think it's Peter the Great, like in 1770 or something. So in other words, he wants the old Soviet Union again, right? And it's not really possible, right? The demographics are against them. Their economy's basically oil. That's basically all it is. So from that point of view, the Americans are trying to sort of say, listen, can we get this done and dusted so we can go and focus on China?
Well, hopefully they do, because we want to trade Gazprom again.
Dude, that's what I couldn't help but think that. When Russian stocks dropped like 99% that day, I thought it'd be clever and buy some.
Oil,
yeah, hopefully
Gazprom,
they turn that on again.
Sherbank, and Foss Agro.
And we snap up some really cheap Russian stocks.
Yeah.
That'd be nice.
Have you guys got the air conditioner on? I hate to be.
It's too far
getting
away.
a bit warm in here.
If you give me a sec, I'll
might be that or the red wine. So that's the story. The real deal is basically US China, and how do we get out of this relationship with minimum damage. And so America has got a stranglehold on the chips. China's got a stranglehold on the rare earths. And so they're both trying to make its own chips. America's trying to make its own rare earths. So that's what's going to be the battle for the next decade.
Yep. And for the interim, fine, we'll sell each other what we need. But
essentially,
we're preparing to not need you.
Yeah, absolutely. And so Trump, from that perspective, is, whilst he personally is revolting, I agree with what he's trying to do. Right, because you have to, if you look at how deep the American economy has been taken advantage of over the last 30 to 40 years, you can see why Trump and a lot of MAGA people are saying this is bullshit, and it is. Right, everybody has taken the Americans for granted, and they've got someone who went, you know what, we're not standing for it anymore. So all of these countries who are screaming, like, oh, that's unfair and all that stuff, they're all the countries who have been, basically taken the mickey out of the US for the last 30 years and not bothering to do anything about their own economy. China, Japan, Europe, India, most of Asia.
Basically everyone.
Basically everyone, bar Australia, Canada, and even Canada's been involved. Really Australia, England and, New Zealand. And the rest of them have gone, we're just going to get in there and do what we can. And part of it was overtaking the international institutions. So that's why Trump has said, right, we're not doing any of this environmental bullshit in the United Nations, because what is coming through is those nations have been co-opted into an agenda which is destroying American industry, right? So that's why Trump is saying we're not doing any of that stuff anymore. We're not doing any of the the NGOs, right, the non-government organisations. He went, right, we're killing all those because they're all feeding money to these places overseas who are then taking advantage, double up, of America. So Trump and his crew have said, okay, that's it, that's enough. We're playing hardball. Now, it looks really ugly, but from a perspective, it only looks ugly if if Trump's coming after you. But the point being, that means you've probably had 30 years of a really good run. That's why Trump's given it to everybody, right? Friend, foe alike, it doesn't matter, because everybody's been taking advantage of the Americans. That's why everybody's getting a blast.
Yeah, I mean, changing anything is going to disjoint people that are used to the old way.
Yeah.
So it could be Trump or anyone else.
Well, Biden moved along, right? Biden moved with the CHIPS Act and the Inflation Reduction Act, right? And they were both about bringing manufacturing onshore. So it's not just Trump.
No.
But Trump really sort of kicked it off in 2016 because Obama was a dead duck, right? He was just, Obama didn't do anything. He's probably one of the worst presidents the US has ever had because he just didn't do anything. And that's why when Trump came in 2016 and said, right, we're bunging tariffs on, all this stuff. Now, there's arguments about, is that the right approach? Economists will carry on and go, oh, it's terrible, blah, blah, blah. But these are the same economists that let America get bent over backwards in the first place.
Well, we've seen inflation in America go up a bit this week, more than what was projected.
What, sorry?
Inflation came out at like 3.1 instead of 2.8, something like that.
Yep.
And that sent the markets into a bit of a tiz for a day.
Yes.
And then it bounced back again.
But that's...
Yeah, BAU.
Yeah.
Well, that's...
By the dip.
That's what we were talking... Well, that's what we were talking on the coaching call, right? Yeah. Now they're starting to go, oh, the tariffs won't matter that much. So the market is just so crazy that I think we joked a few weeks ago where we said, oh, nuclear attack in China. It's like, oh, bullish.
Yeah. Right? Oh, literally, on Reddit, like, there's people going, war is bullish.
Yeah,
like,
yeah, absolutely.
Now associated, going, oh, my, this is just, it's become
by defense.
The credible source of Reddit.
We've got to, dude, I've spent too much time on Reddit. There's a snip of a tweet that you've got here, Steve. Largest 10% of US stocks now make up 76% of market cap. Which is the highest concentration in history.
Yep.
I mean, I feel like every week we go on about this bubble's growing, blah, 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 blah. But like just all this stuff keeps putting it into perspective. Come on, man.
I'm just trying to find 55 million new ways to say, hey, the market looks expensive.
Just look at your allocation, all right?
Yeah.
Obviously, there's opportunities, old man buffets, buying up healthcare.
It's just nutty. It's just nutty.
If you don't have a strategy to mitigate a potential downside, now is probably a good time to think about it.
Now, which brings me to AI, okay? Because AI is overhyped. Oh. Yes, Tom. I know you're a believer, Tom.
Have you ever used it?
Well,
ChatGPT.
I've used it, I think, once. Right? Oh, yeah, let's all laugh at the old guy.
Go on, Steve.
Go on. Sorry.
No. Yeah, but seriously, I will have the last laugh here.
You bought the wine.
I did.
Okay.
That's right. Is that the Yalumba Coonawarra, Tom?
Dude. Shameless plug.
Available at all BWS stores. Now, AI, listen, AI's bullshit, right? Cut it out. Short the market. We're going to make a fortune. There you go. That's it.
Not advice.
Not advice. No. It should listen to old men like me, but it's not advice.
Puts on an AI.
You should short the NASDAQ. If I was me, and I am me, I'd be short the NASDAQ if I were me.
Well, if you were you.
Yeah. But I wouldn't listen to me because that's advice,
We've got a cowboy.
right?
Please don't sue
I'm just
us.
telling you, I'm old enough to have seen this before, right?
Yeah.
That's it. Righto, come on, let's get on with it. What else
All
have we
right.
got?
What do you want? What are you going on about
The Oz
insider
economy.
trading?
The Oz economy.
Okay.
Righto. The Reserve Bank's cut interest rates again, right? All the mortgage
And
holders.
everyone's buying property still.
Good decision.
All the way.
That makes sense.
Yeah, all the mortgage holders are out there boozing up on your lumber.
Yeah.
Why? Because they got an extra $40 a week.
Yes.
They're rolling in it.
And
I think it's something like on 500,000. And I would argue if you've got a mortgage of 500,000, you're probably actually doing all right.
You're doing pretty well.
Yeah, but if you've got a mortgage of $1 million, yeah. And I think on $1 million you save, I don't know, something pathetic. I think it's $160 a month or something. Like it's not a lot. It's not a lot.
No.
So-
well, it's come down. It came down by 0.25 a while ago. It's come down by another 0.25.
Yeah.
It adds up.
Yep.
But what it means is that more and more people are going to be borrowing still. The banks are having a field day, and we're just going to keep pushing property prices.
Yeah, the lending's increasing. Most of the prices are going up. And I said this morning on the week that was, if you know, like the connection is immigration, is pouring into the country. Okay, granted.
There aren't that many immigrants taking out $1.2 million loans, though.
No, that's true, but they're pushing the rental market up.
Yeah.
Right. And the argument is, well, you should buy an investment property and get the yield. Right, but the yields are awful. The yields are like 2%, and the reason why is because the average Sydney property is like $2 million. But the issue there is, I always look for when someone makes a statement, and we're going to talk about this. I think are we? No, but we're talking. I think I did a blog post on it. I did.
Yeah.
Disconfirming.
Check out the blog, everyone, because Steve's crying about no one reading his blogs.
Well, I'm not crying, but I'm tearful. The thing about disconfirming evidence is, okay, you're a believer in AI, right?
Oh, I'm just, I think it's not as bad as you
now
say.
now
I don't think it's going to
now
change.
he's-
Very political.
Now he's backtracking.
No,
right?
I'm,
I find
Last
it
week
really-
you were like,
I'm in tech, okay? I'm in tech. All right?
Got him.
What do you like?
right.
I see the application.
So, yeah.
Like, you can't tell me. I'm not saying that it's worth $4.5 trillion for a company.
Right,
Let me
okay.
buy it.
Okay.
We're bullying him.
Okay,
today.
let's just say, what if Tom was a believer, right? And I said, okay, Tom, what disconfirming evidence have you read? Right? This is the important part, because I always say to people, when you come to the stock market, when you come to an investment, you're always positive. Otherwise, you wouldn't invest, would you? If you went, oh, I'm going to lose some money in this property, cool, let's buy it. What you're doing is saying, I'm going to buy this property because I'm pretty sure I'm going to make money. Okay, and that's fine. But what you should do, as Charlie Munger said, was invert, always invert. And what he meant was you should go and read, why shouldn't I invest in that property, right? So if from my perspective, AI has all of those hallmarks of the dot-com bubble where people were saying, oh, it's going to change the world, everyone's going to be unemployed. It's like, okay, please tell me how that happens. Now, the reason why I say that is because Chat
GPT
5
You're good at this.
released this week was an abomination, right? There was heaps of stuff on there that went, this is garbage, and it's been a real failure. So now the narrative is starting to change, right? Therefore, you want to say, do you know about the scaling problems? Do you know about the hallucination problems, right? Most of the people...
AI hallucinates. Ask it yourself, it'll tell you.
But yeah. But this is the problem. You see, that the you can't get it to do something, and then it hallucinates, and you go, oh well, is that the right answer or not? Well, you don't know.
Hold on, what does that mean?
I
How
see
does
your
it
point. I
hallucinate?
think it depends. It will make things up.
Oh, okay. Not just,
Yes.
just like
Well,
crap.
It
lawyers-
just doesn't sit there like
Yeah.
tripping.
Like lawyers will cite cases in court, say,
From Chat-
Senior versus Moriarty, 1977, and the court goes, there's no such case. Oh, well, sorry, Your Honour, I used ChatGPT.
Oh my god.
right?
Yeah,
So
okay.
that's what I mean.
That's the common sense approach, though, right? I'm not even here to just senselessly argue either.
Tom Hill for the 4.
But like you use it quite often.
I use
for,
it. I
for
do.
generating images,
Yep.
like putting templates and things together.
Yep.
Like
Yeah,
it
but
has an
mate-
application. No one's saying it's going to replace the workforce.
Okay.
For me, it's a time saver.
Tom, come on. There's millions of people
No
out
one
there
in this
saying,
room.
Oh.
No one in this room.
Okay.
right.
I'm going to go a little broader than what's in this room.
Sure.
Okay,
We've
thank
spiked
you.
an argument.
Wow.
But
Episode 98.
Steve's.
We better get on with it.
got
Anyway,
100,
the
we get
point
real
being,
mad.
my point being is the reason why you should be looking at hedging the NASDAQ is because the story of AI is changing. The other thing is a lot of the stuff, and this is why if you look on the first page, their headline there is Sam Altman, right, OpenAI guru, typical Halo guy for the latest buzz thing, now says AGI, right, artificial general intelligence, on human level AI is, quote, not a super useful term, right? Now, 6 months ago, Sam Altman was saying AGI is going to like kill all of us humans because it's just going to be super smart. Now he's going, oh, that's not a useful term.
He needed investors.
That's the point, Jacob, right? The point is they're still in raising money funds, and the problem is it's really hard to find a pathway to profit, right? Because there's like, Elon Musk has got Grok, or there's OpenAI, and there's all these AI applications. So the argument is, okay, well, if this thing is not as good as they say it is, it's got a scaling problem, it's got hallucinations. Why would I pay you, $10,000 a month to use this thing when I've got to get someone to sit there and check it anyway, right? Because it's like the full self-driving stuff, right? Musk is out there going, we're going to have robo-taxis by the end of the year. Here they are in Texas, and you look at them in Texas, and it's a guy sitting in the passenger seat. And it's like, okay, how's that full self-driving, right? Or it's remotely monitored by staff. So what I'm saying is there's all this bullshit and hype going on in tech everywhere, like robots and all this stuff. And I think you'll find we're going to be really disappointed. Now, the important part for us as investors is going, man, oh man, that really doesn't mean Nvidia's worth 4.4 trillion. That's where I think if the nexus breaks, there's going to be some big trouble.
I mean, from an investment point of view, it's overvalued. Like, there's no arguing that.
Seriously overvalued.
It's incredibly, like, it wouldn't even be on page 100 of Google if I was looking at things to invest in. But there's a time. I think what we're trying to link it back to is, to your point, the dot-com bubble, where for every 100 tech companies building a website or whatever, 3 of them were left over when it all crashed.
Yeah.
And that's the time to invest long term.
Then you look at it and go, who's left?
Yeah.
Okay, they're going to be the survivors.
Yeah, AI will be around, and because it's a tech that it's just the next big thing that will make, in my opinion, save time on a lot of mundane nonsense admin type things.
If it's fenced,
yeah,
right. And
if it's controlled, but what we're trying to say is, like, don't throw everything at it right now when we're not even at that phase yet of figuring out what's going to stay and what's going to go. New things are coming out every week.
Yep. And
there's probably not too many companies worth over double the Australian GDP.
No.
Yes,
Yeah.
exactly. Yeah. And then you've got to throw in, well, like you just said, right, the top 10 are worth 76% of the market.
Everything.
And it's like, someone's really overvalued there.
What is the total market cap? I probably could have Googled that.
Yes, it's 100 and... I think, oh God, I saw it today because it was a record, because I remember thinking, I should remember that. I think it's 150 trillion US. Is that right?
I've Googled it here. I'm not sure if it's right or not.
You Google, I'll drink.
It's AI, 62.8 trillion, but I'm guessing that's US dollars.
The US market, according to Google, is 62 trillion.
62, so that's about 100 trillion US.
Aussie.
No, this.
I'm sorry, Aussie. Okay. And so market.
So 4.5 of that is Nvidia.
It's a beast, isn't it?
Yeah. Well, sorry guys, I think it's more than that, because I think Nvidia is 8%. Oh, that's 8% of one index. Okay, yeah, because you've got the S&P, NASDAQ and Dow Jones. Okay. Yeah.
All right. Oz economy. So we've cut rates. We've covered that.
Wages going up a little bit, but they're not going up as much.
Yeah.
There's the home lending is still going up. We're going to have a productivity chat fest. And then out of that, we'll probably write a big book and do nothing. And like we always do, right? Oh, that's too hard. No, we can't do that. Right.
Well, how can we increase productivity?
Raise wages. Yeah. And I know that sounds a bit like,
obvious, yeah.
Yeah, well, no, it's not obvious. The reason why is, and I might have said this a few months ago, how do I get you, if you're a business owner, right, you're controlling the capital.
Yeah.
Right? And I come to you and I say, listen, Jacob, I'd like your business to be more productive. And you're making a profit, right, with the way it is now. So I have to say, try to convince you that you can make more money, but you don't have to, do too much more work, right, which is productivity.
Yep.
Okay? So the way you do that, let's say you've got 4 staff, right, and I say, listen, Jacob, I'd like you to be more productive. Okay, which means you've got to make the same amount or more money with increasing efficiency.
Yeah.
Right? And you say to me, Steve, I'm doing all right, mate. I don't really need to do much. So if I say to you, okay, well, I'll tell you what, Jacob, I'd like you to think about how you can improve it. And you go, yeah, right, whatever. Then I come back and I say, listen, Jacob, I'm raising the wages of all your staff, right? So now, instead of paying them $1,000 a week, you've got to pay them $1,200, right? That's when you go, hey, hang on, I need to have a look at this. Right, because that extra wage will be taken out of what your profit is.
Yeah, okay, but you can only enforce like an increase in minimum wage, right?
Yeah,
like you can't enforce like when you're Jacob on $500,000 a year. You can't force someone to pay him $600.
No, that's true. But
you got your own back from last week. Well done.
Well, Tom's only on $350.
Yeah, yeah.
Have a bit of sympathy for the people who are doing it tough, mate.
The poor people.
But families, mate, families. The thing is, that's true, Tom. But you've got to remember what you can do is by raising the minimum wage. What you can do is raising wages generally. You might go, all right, well, I'm not going to work in a coffee shop now. I'm going to work at, a tradie, right, or an equivalent job. So the idea being, if Jacob is losing, quote, $500 a week through paying staff more money, he will say, okay, well, I need to think about how I can reduce my costs. Now, he may say, well, listen, I'm going to get rid of one of the workers and I'm going to employ a robot. Right, or a coffee machine or something like that. But again, the idea is if you raise their costs, that will drive efficiency, right? But the problem is...
Or you get higher quality people that can do better work.
Yes, you might say, well, listen, Jacob serves 10 coffees an hour. I can get Tom who does 20 and sell more coffee per hour, right? Or things like that. But again, part of it is... The main part is saying, I'm going to have to get the business owners, I'm going to have to raise the costs of the business owners so they become more productive, right? That's why Jeff Bezos has millions of robots. Why? Because they're better than humans. But what we can do is that people will say, oh, yeah, and then there'll be more unemployed. Well, no, because those people can then go and do some other stuff that is, again, more productive. Right, so you get a productivity, what do they call it, virtuous circle, right? That we haven't had that for years in Australia, and the reason why is because wages are going nowhere, right? Why would I, as a business owner, go, oh man, I'm really struggling. I need to really, knuckle down here. They're all making loads of money.
Profits are going up, but wages are not.
Exactly. So it's not beholden for me to go, oh man, I should pay Jacob more. Because it's going to come straight out of my profit, right? Because at the end of the day, when you look at a business, the profit goes to 2 people. It goes to the business owner or it goes to the staff, right? Ignoring tax, right?
Yeah.
So if you raise Jacob's part, that means you're going to get less unless you can grow. But if you said, well, listen, I can't force people to get in here and buy my coffee. The alternative is you have to say, okay, well, how can I make Jacob more productive, right? That's the sort of thing that you've got to do. But there's not a lot of talk about that, right? And the reason why is because wages are not going up that much, right? So, that's why I'm saying unless they start talking about that, there's you can give tax breaks and all that sort of stuff, but it doesn't really do enough, right? And again, the tax breaks end up in the owners of the capital, right? The business owners. It doesn't do anything for the staff. So again, you just get this increasing inequality.
It's an interesting take. So the next part on dollar cost averaging or lump sum, before we get into this, there was an interesting question, which is where this came from. But the question was, should I dollar cost average out of a market rather than into the market? So, for example, the S&P's at all-time highs now, and if someone's heavily invested in the S&P, should he or she lump sum remove or dollar cost average out?
So it's like, well, it's a rebalancing question.
Exactly,
right,
yeah.
Okay.
But I think what we've got here, which we definitely need to work through because it's really interesting, but that's getting in.
Yeah, okay, I see what you mean.
But also, that doesn't end, also getting out is not just a rebalancing.
Yeah, if someone's
right?
in...
Well, no, I think...
Unless someone goes, I'll end up selling 90% of my stock,
yes,
keeping 10% of it.
Yeah.
I'll buy some more.
It's actually asset allocation.
You should generally, if that's the case... Okay, sorry, I misread that question. But if you want to read the opposite about asset allocation, lump sum versus dollar cost...
Yeah.
Head to the blog. Proudly sponsored by Yolumba.
Please go.
Right, yeah. Someone go and read the blog. God.
It's good.
It is actually really good.
God. Bob, if you're listening, go and read the blog. Anyway, I just repeated the blog here, actually, in the week that was. But the point being, rebalancing. Okay, as the market rises, here's what you've got to think about. You've got to think in two terms. You've got to think in straight dollar terms, right? I made $10,000. Okay, I'm going to, quote, rebalance. I'm going to take $5,000 out, right? Now, if it goes back again, back to 10,000, you might then take 10,000 out, right? As the market rises, generally you should be pruning it back where you're building the cash pile, right? Like Warren Buffett does.
Yep.
Right? Then when at the top of the market, you may not have that much in there, but in dollar amounts, you're still doing well. Do you see what I mean there? You might say, oh man, if I'd have stayed in, I'd have made 30,000, right? And I say, okay, well, you didn't. You did the right thing, and you only made 20,000.
The point is not we're not investing for one term.
Yes.
We're investing for 30 terms or
Yes.
50 terms.
It's a delicate balance of make sure you keep the profits when they're there, or when the market gives them to you, and also make sure that if the market takes a tumble, you hold on to as much of it as you can.
You can take advantage of it.
Yeah.
And the way to do that is by having lots of cash, right? So from that point of view, what I'm trying to get people to understand is really important. You've got to think about your investment over time, right? So please don't think, oh man, if I don't rebalance now, the world will end. There will be other opportunities in the market, right? It's really important to remember because what people tend to do is they tend to let the market rise up, and they don't rebalance enough. Then when the market starts falling, they start panicking, right? And then they do the wrong thing at the wrong time. So at the peak of the market, you should have, we've got a slide on it with the earnings yield, right? The market goes, you and I have got 100,000, right? We put 80,000 in the market and we keep 20 in cash. The market goes up, and let's say we've got 200 at the top of the market. We've both got 240,000. Yep. We meet at the Christmas party. You say to me, Steve, the market's batshit crazy. I'm going to go from 80-20 to 20-80, right? So your stocks are worth 220. So you sell about $170,000 worth. So now you've only at the top of the market, you've gone from having 220,000 to 50, right? Now I can tell you that is really painful, right? Because everybody's going, dude, you are doing the wrong thing. Then the market collapses 50%, right? Your 50,000 goes to 25. So now you've got 25 in stock, but you've got 190 in cash. Now at the bottom of the market, you've got 215, But importantly, you've got 190,000 in cash that you can plunge back into the market
when it's cheap.
When it's cheap, right? Me, on the other hand, I say to you, "Oh, you're an idiot, Tom. You just got to buy and hold over the cycle." At the bottom of the cycle, I end up with about 130,000.
And you're just waiting for it to catch up.
And then I'm sitting there going, it's at 130. I did have 240. And now Tom's going to reinvest 150, 190 grand. And I've got $1,000 a month, that I can save because I haven't got any cash.
Yeah.
Right? That's the really, really important lesson. Look, I can tell you, it's really painful. Right? Rebalancing always sucks because if you take money off and it goes up, you go, oh, man, I should have, I did it with Well One this week, right? You take money off and you go, oh, man, the market's gone up 3%. I knew I should, and then you do that, I'd have made an extra $5,000. Oh, God, I'm such an idiot, right? If it falls, you go, oh, I knew I should have taken more of it out. Like it just emotionally, wrecks you, right? So the best thing to do, and as I say to people, is have a system. Just rebalance and go, hey, I made money. Yep, cool.
Yep.
Right? Because over time, as I say, there's two things you can do in the market. You can make money or you can lose money. Now, if I say to you, Tom, we are going to focus on not losing money, right, as best as we can, there's only one thing you can do. That's make money, right? That's the thing people have got to focus on. You make money by not losing, right? It's that paradox.
Yeah, but the caveat is you can't just hold 100% cash to
Yes,
not lose money. Because that will lose money to inflation.
Well, absolutely. But you see, again, if you said to me, Steve, I never want to lose money, I might say to you, all right, Tom,
Bonds.
You've got 100 grand, put $1,000 a month into the stock market. Right? Now, you might rightly say, oh, well, okay, Steve, I won't lose money, but geez, mate, I'm not going to be making a lot. And I say to you, oh, all right, Tom, we'll put the whole 100,000 in. And you go, oh, God, Steve, don't be crazy, I could lose my money. There's the argument. The argument is, okay, well, what risk do you take for what reward you want? Right? So we might agree and say, okay, Tom, are you comfortable with 50,000 in the market and 50,000 in cash? Right? And you'll rebalance every month. You might go, okay, that's good. So, okay. Now, I can tell you, because I did it last week, if the market goes down 1% per week, right, and you've got 100 in cash and 100 in stocks, so you got 200,000, right? If I said to you, Tom, the market's going to fall 1% every week, right, it takes you, and please don't quote me on this, but I'll bring it in next week, but it's something like 171 weeks, right, 3 years before you run out of money, right? So then you would say, okay, has the market ever gone down for, 3 years in a row at 1% every week? And the answer is no, right? So this is the way you think about it, where you go, okay, well, I need to have cash, but I want to try and maximise my return, right? And that's why I say, if you look at the process of rebalancing with volatility, that's where you make your money. And it can be painful because the market will run up and you're going, oh, man, I rebalanced and I should have held it in. And it's like, dude, just keep doing that, right? Because there'll be a big market fall like we've been talking about at the Cape of 39 and you'll be going, oh, man, thank God I rebalanced and got out, right? Or, had minimum in there.
Or if you have a liberation day, it's a game changer and you make heaps more.
Yeah, and you hedge.
I feel like you've given away a lot of trade secrets there to everyone, so thank you.
Well,
it's the Yalumba. It's the Yalumba talking.
Without pitching why, like if you wanted, like if you're listening and you're like, I want to build an investment strategy, just reach out. Like there's no obligation. Have a chat. We love this stuff.
We do.
So let's just
we
have
do.
a go. Anyway,
we're also very partial to Yalumba.
Let's close
you
it out.
blokes, have a look at it. Every week I bring in a bottle of wine. I get one glass. You guys get about
You
three.
need to bring
I have
two.
no idea what you're talking about.
Lessons from history. What have we got here? EV sales. Please don't talk about EVs.
The new
again.
era
No,
doctrine.
no. I'm just talking about it's just very quickly. It's about new era. It's again, what you're hearing is AI, robots. We're in this new era.
Who
right?
wrote this new era thing?
Jeremy Grantham.
Ben Graham or Jeremy Grantham?
Oh, sorry, yeah, Ben Graham.
Yeah.
Ben Graham, right? Those two charts there, what they're showing is
The
price to sales, and I'm the sober one.
As a guru,
right?
as a guru in there.
And No, I had a Jeremy Grantham one in there. Then I swapped it out for a Ben Graham one. Righto.
Old chestnut.
Cut me some slack. Righto. Okay, there's 2 charts there. Price to sales 10 times and price to sales of 20 times. Right? So that's a really good indicator. Now, where are all the really outrageous price to sales?
Yeah, EVs. AI.
What are you talking about, EVs?
You've got EV sales here.
Have I?
20 times.
Yeah, they're both EV sales.
Have you been on the Yalimba for a few
Oh, my
hours?
God. What's EV stand for?
Electric vehicles.
Dickheads. Enterprise value.
Do you get it?
You
there we
guys.
go.
You young people.
Let's get on.
Stop. They're killing me.
Okay, mate.
What a messy one this week, fellas. But it's been good to see you.
And we've gone over time.
We've gone over.
God, I'm missing the footy for
There's
this
no
year,
questions as either, so if you feel free to knock your questions in for next week, and we'll answer a few more than usual.
Yeah, and there'll be another wine review.
Yeah.
Thanks, everyone.
All right. Thank you. Bye.
Cheers, folks.
As always, remember, we don't provide financial advice.
People love it, mate. People love the banter. They love the banter.
Dan's going to put that in the
That
clips.
Put that in the clip, Dan.